Yo, what is going on, guys? Hope all of you guys have had an amazing day. Jerry Trades back in another market recap. So today we're going to go ahead and cover today's trade in Tesla. So yesterday I noticed that we had aggressive kind of buying pressure. Tesla was coming down from, yesterday's aggressive buying pressure, as you guys can see here. We came up off of a low of 407 up to a high of 420 all in one day. Is 13, I believe that with 407, yeah, $13 gain in one day. So I noticed this aggressive buying pressure going into today. I was like, you know what, maybe they keep this up, especially because the sentiment in the market is slowly starting to, turn back toward bullish after all of, interest rate cut decisions. We had Nvidia earnings putting a lot of fear in the market. So the fear and greed index is lighting up. And today we caught a really good opportunity with Tesla. Unfortunately, we did break even, and I'm here to explain to you guys why and what I've seen in the market. So want to go ahead and show you guys today Tesla's trend, right? Let's go ahead and bring this up for you guys. Nice. Hope everyone can see that on the chart. So first, market opened up bearish. So whenever I see these aggressive kind of sell-offs early in the market, especially with the bullish sentiment in the market, for those of you guys that don't know what a bullish sentiment in the market means, it just means, is there more buyers in the market or more sellers in the market depending on the day? A good way of looking at what the sentiment is like for the day, I always like to use SPY as a reference. So the ETF SPY, this isn't it. Let me see if we can find SP 500. One second, guys. That's weird. That isn't it. One second, guys. One second. Let me go ahead and find SPY right here. Right here, NYC. All right, so a good way to look at the sentiment for the day, right? So this is today, just to get you guys kind of caught up. This is the 26th, and then back over here is the 25th. So yesterday's sentiment, bullish. You've seen that open up from the bottom of those lows, closing out green. Bullish sentiment, so we have more buyers in the market. Same thing with today. Coming off these lows, a little bit of selling pressure here at the beginning of market open, setting up nicely. Here catching support at 667 and running back up to a high here of 681. So bullish sentiment going into the market. Notice that SPY was holding the support here. Why do I look at SPY? Well, many of you guys have to first understand that SPY is the top 500 companies in the stock market. So it's an ETF. An ETF is essentially a portfolio combined of the top performing companies all in one portfolio. So it's diversified between all of them. So essentially, if SPY is performing good, usually the rest of the market's performing good. So it's a good guide for you guys to use as a reference to know, hey, is this company likely to go up or go down, especially if they're in the S&P 500. Well, Tesla's one of those few companies that's in the S&P 500. So usually if SPY is turning out bullish or bearish, Tesla's going to go ahead and reflect that. So immediately going into today's market, I've seen this selling pressure. Let me go ahead and widen this out a little bit. I've seen that selling pressure, but I noticed we caught some support here early in the market at 417. Once we went ahead and caught this, little bit of support here, I was like, okay, we have an easy reversal. I noticed this aggressive sell-off right here after this buy. Once we hit this resistance here at 421. A resistance is a point in the market where you can tell that we hit here, come down. Another example, hit here, come down. Another example here, come down. Another example here, come down. Until we finally broke up into this bullish market. And reality, we're finding this whole bullish trend in the long grand scheme of things, right? But the problem here with today's market, me entering the trade a bit early, right? My entry wasn't necessarily the greatest. And at the end of the day, I left about $420 on the table in profits simply because I don't know, I guess I wasn't patient enough. I was too consumed by the thought of tomorrow, Thursday, 11/27 being Thanksgiving, market's gonna be closed. There's no way I'm gonna hold this contract until Friday and allow it to lose value to the Greek theta. For those of you guys that don't know what theta is time decay. So how I like to explain this is like, imagine you buy a car with 3,000 miles on it, right? And you try to sell the car later on, and whatever you used that you had your fun, and you want to sell the car for what you got it for, but it now has 50, 60,000 miles. The buyer of that car is not going to pay you what you paid for it. So you're not going to get back, your full money. You're going to lose some money, and it's because the vehicle is now used. Same thing with contracts. The longer you hold them, the more time that you spend with them, the more value that they're going to be losing. So when I had this kind of thought kind of consuming me for the day, because I noticed that, first, right here when I enter the position, let me go ahead and mark my entry so you guys have that point of reference. Notice this immediate sell-off. Previous support was here at 417. I knew once we hit this 417, we were going to reverse coming back up because it's a strong point of support here at 417. Let me go ahead and box that out for you guys. And how I like to trade, I like to find some sort of confirmation. So this right here was the first push up. Very aggressive, a lot of potential there. We've seen that we rejected off of 421. Cool, that's the first push. Second push, up here from 418 up to again 421. That first aggressive push for me was a sign. Okay, this bullish sentiment is pretty strong. We're gonna go ahead and keep this up into the almost all day until market close. But this is where I got caught in the crossfire. Let me go ahead and show you guys exactly what happened here. So when I made this first push up, I was like, okay, perfect. Let's go ahead and target that. I seen that we're pushing back up into this area here. My entry was right here at 419. We entered 419. Technically, I had all of this in profits, right, that I could have made, and I would have brought back that $420 off the table. But this is the problem where everything kind of went wrong. So when I enter the trade here, remember, this is my entry, this little split between red and green. The split of red and green was my entry. So I entered here. Boom, we got profits here. About from 419 to 421, I was already positive 40% on my trade. My cost per contract was 300, so 40% of that is a little bit less than 150. You're thinking about maybe like 145 in profit. So that's $70 profit each contract. Now, well, $70 and $72.50, so $72.50 profit per contract, bringing up to a total of 145 profit. For me, this is the hard part, right? Being used to trading higher capital and seeing more returns for my investment, seeing 145, especially following the bullish sentiment, for me, I felt it intuitively that we had more profits to run. There was more money to make. So I was like, all right, you know what? I'm gonna go ahead and hold it. Didn't take my profits here with 145 profit, and now, as you guys can see here, I was exposed to this drawdown. I was here, we got the push up here, got the push up here, even at the push up here. But like I mentioned, theta, the money that I had right here at 145, now remember, keep in mind, this span, all of this price action here took about, you can say arguably like 30 minutes. And those 30 minutes, by the time I got back up here, I was not making what I would make right here because of theta. Theta's time decay. So instead of making 140 here, now I was only making $45, 50 bucks. So these pushes right here, right? We got the first push right here. Boom, came back down, back in the negatives right here. Let me hide my rectangle. Second push up here. Third push up here. All of this is technically considered consolidation because we're only sticking between this whole range of 419 up to a high of 421. We didn't break it. There wasn't enough price action or buying volume to just break out of it instantly. We had that debate, that argument going up and down. This took about an hour and a half. So like, you know what, like, fuck it. Like, Tesla's not going to have this bullish momentum that I expected. I'm just going to go ahead and close the trade out. And thankfully, I was able to get out for break even. And I went ahead and exited right around here. But later on in the day, to my surprise, we had all of this happen after. And this is where I left $420 on the table going into market close. But I kind of wanted to share with you guys a little bit of, I guess the bright side of this trade. There was money left to be made, but going into trading with such, low capital at the time being, like even just, what, 600 bucks what that position was worth, it's more, I guess, me adapting to a much more conservative mindset to protect this capital. I feel like it's important you understand when you're working with a certain amount of capital or a certain amount of, what can I say? Like, this $600 portfolio value is technically like basically everything that I have to invest with right now. So am I gonna expose that to the risk of losing it, especially, you know, with 600 bucks to some might be a lot, but in the game of trading, that's really a little bit. You have to keep that lifeline alive and protect it. So I was much more conservative. It's what I've been practicing growing this $500 account. So taking break even was like, I had won the previous 3 trades for the week. I'm like, you know what? I'm not gonna, you know, let this be the downfall. You know, I'm not gonna let this be the loss that now I'm worried about. I have to make it back on Friday, especially before Thanksgiving. I want to just have a little bit of more peace of mind. So I was able to play it a bit more conservatively and exited here for a break even. But I wanted really to share with you guys kind of the perspective of the entry and, you know, identifying the previous, you know, buying pressure for the day to allow me to predict, you know, the momentum going into today's market after yesterday's performance. Same thing here. You know, we got a little bit of selling pressure here, but eventually that bullish momentum did carry over until the following day. And well, taking the break even, sure, you know, isn't profitable, but I think it's also a way of me, you know, understanding my current capital situation and respecting it to the point where actually now this is the problem, right? With risking capital, it's very hard to allow drawdown and still have faith in the profits. Let me hold on. I want to word this correctly because it's important you guys understand that drawdown is essentially a part of the game. Your entries aren't always going to be perfect. They're not. So you might lose, you know, negative 20%, negative 30%. I think at some point on this trade I was negative 25%. And my drawdown currently, like my limit, stop limit, like after a trade, I'm risking max 25-30%. So I was already like negative 30%, and I'm here now at break even. I'm like, there's no way I'm about to allow this position to come back negative 30%, especially if the market wants to consolidate like this. You know, you guys have to understand this point right here. It's just consolidating, meaning that look at this. This whole range, we stuck that for now. Maybe here it says 3:40 p.m. and now this is 5:55 p.m. That's about 2 hours of straight consolidation. So I'm not in the profits. I'm technically in the loss because my entry was bad, but I'm not in substantial profits either. So this is just right here, time decay. I'm falling victim to it. I'm not, you know, I'm thinking about tomorrow market being closed. You know, like I'm thinking about a really shorter time frame in terms of reward, and I was just like, you know what, take the break even. It is what it is. It's going to be a good reflection to kind of remind you guys that, you know, if you don't feel too confident about profits, taking a break even is always a great step as a trader to, you know, essentially set back. And if the position ended up playing in your favor like it did today here, don't beat yourself up about it. As long as you didn't lose capital, it's a win at the end of the day. But today, unfortunately, 11/26/2025, we did break even. A lot of upside potential here on Tesla, but I'm not really too concerned. You know, I think that the way the sentiment is for the market, there's still more room for Tesla to recover, although we did come back off of these highs here. Look at this aggressive buy here on Monday. Monday we opened up like a raging bull, 400 all the way to a high of 420, $20 in a gain. That's a 5% price move for Tesla on Monday. That really set the tone for today, for this week's market. So I'm not sure if we're going to come back up to these highs. You know, if you're looking at Tesla from a longer term perspective, let's jump into the 1 hour time frame. You're going to go ahead and see that Tesla is still oversold just slightly. You know, I would argue that up here at 478, you even have this, you know, kind of mid support here at 435. Our 435 is a little bit more reasonable in value. 478, 467, that's a bit overvalued for Tesla, especially for such a like short period of time. You know, you're looking here, we jumped up from September to a high in 1 month. We went from 370 up to 475. That's extremely aggressive buying pressure for any company. You know, jumping that much, about what, $125, $150 in profit in just a little over a month. That's not too common in the stock market. So, you know, I would argue these are a bit overvalued. I believe Tesla, you know, has really good bullish sentiment behind it. So there's still room to grow. I'm not sure if I'm going to be trading it on that way up, because usually it's preferred to trade Tesla around these areas here. You see this kind of touch right here, this touch right here. These are what you call your supply zones. So it's important you understand supply zones. Supply zones are where there's 90% of buyers and 10% of sellers. It's where a lot of investors see the price action and they buy. They're not debating, oh, should I? No, it's like, this is a great opportunity, buy it. There's a lot less fear at these price levels compared to buying up here where you see these draws down, this draw down, this draw down, where now it's not, still the lows of this higher range up here, but now it's the highs of this range down here. So this is what you would call technically your support. Now at a support level, there's around 70% of buyers because it's still lower, but you still have those 30% sellers that could bring this down towards the downside. So, understanding where you're at in the price action, people like to kind of confuse going too far back in time as a reference. Like for advice from me to you guys, looking back a week or two is really all the reference you need historically to predict where price is going to go in the future, at least once you gain a little bit more experience. But yeah, I think Tesla has a lot of room to grow going into this month. I think, December is going to close out really bullishly. Hopefully we get, currently favoring that rate cut. And once we get that, I believe the market could have a really good run. November's economic data that we get after that interest rate cut is going to be very interesting. I believe we're going to have a lot of volatility going into December. So we have room for it to grow, but currently I have no complaints with what happened today. But I hope that's a really good, insightful market recap for you guys to understand, the break-even perspective and how to minimize risk, and also how to, look at previous day price moves to understand the price move of the future. Hope you guys enjoyed today's video, and thank you guys for tuning in to all the market recaps. Jerry Trades, the SoCal Trading Group, over and out.